Hello, and welcome to Ask the Mortgage Guys Live. I'm your host, Sarah Patnode, and I am so thrilled to be back here to talk about part two. Understand the facts, the stigma around VA lending. So, thank you so much for joining us this evening. We are so happy to be back here. We want to know that you're viewing. So, please send us a note in the comment, share the love, let us know. Also, too, we're going to have a question and answer Q&A segment of our program tonight. So get your questions ready. You can submit them in the comments at any time. We'll be able to answer your questions. But welcome everybody. Our viewers and our podcast listeners might not know who you guys are, Kelly and Randy. So let's take a moment to get you guys to do your introductions. I'll let you guys take it away, and I will be back for the Q&A. So let me hand it over to you, Kelly. How does that sound?
That sounds great. Thank you, Sarah.
Thank you, and I'll be back.
So, hello, everyone. I am Kelly Overgard, and I am a mortgage loan officer that heads up the branch in Prior Lake, Minnesota. And I'm super excited to be back here with Randy and get started on our topic. So, I'll let him introduce it.
All right. Kelly, thank you. So my name is Randy Erickson, and I have the privilege of heading up Kevnick's Florida branch. And one of the things that we're just so excited about is to continue the series that we started 2 weeks ago. So this is part two of a two-part series. In part one of our series on VA loans, we spent time talking about some of the common misconceptions associated with VA loans. If you haven't viewed part one in the series, it's available on our website, or on our Facebook page, and via our new podcast channel called Ask the Mortgage Guides. In series two, we're going to move from more of the high level view of the VA loan program into some key terms or details that you want to become more familiar with. And so, Kelly, as we think about the VA loan program, and we start to think about it instead of at the high level, at more of the micro level, what are some of those things that come to mind to you that we should be thinking about?
Absolutely. So one of the most important things is to understand that the VA home loans are actually provided by lenders like us. So the actual loan, the origination, processing, closing, the whole thing is done by the lender, and then it's insured by the Department of Veteran Affairs. So you would actually work with Kevnick Mortgage as a VA home loan expert to actually get your mortgage. So that's one of the things. The other thing is as soon as we start talking to a prospective veteran, we talk to them about finding out if they're eligible. And to find out if they're eligible, we actually help them obtain their certificate of eligibility. And it's also known as a COE in the market, but the certificate of eligibility will actually show if the veteran is eligible. Most active service members, veterans, and surviving spouses of the actual veteran are eligible, but it's that form that is crucial. So not only does that form show if you're eligible, the other important thing that it shows is whether or not the veteran has to pay the VA funding fee. And the VA funding fee is the actual fee that is paid by the veteran to the Department of Veteran Affairs to insure the loan. And on that certificate of eligibility, as soon as we get it, we'll see whether or not they have to pay that funding fee. And there's a couple categories that usually fall into an exemption where they would not have to pay it. And that's if they're receiving a service-related disability benefit from the VA, if they are a surviving spouse of a veteran, or also for our Purple Heart recipients. So there's different criteria to see if they're exempt. And the really, really nice thing is that we have all of that at our fingertips, and we will help the veteran get the certificate of eligibility and, most importantly, understand what that means to them. So that's one piece of it. The other piece is, let me see here, anyone that has served may be eligible. So don't assume that you didn't serve long enough, that you didn't serve in the right time frame, whatever it may be. please don't make that assumption on your own. We want you to get this VA home loan benefit, and we are here to help you, and we can help you easily. So please, contact one of us and don't assume that you do or do not get that benefit. And then Randy, you're actually going to go into some really good details on the types of loans that they can get and some other terminology, right?
Yeah, absolutely. Yeah. So Kelly, thank you for that information. It's interesting. We get a lot of questions from veterans or from realtors regarding the different types of VA loans or what different terms mean, ultimately, through the loan process. So we wanted to talk about the VA loan types. We wanted to talk about a few other terms as well. So there's three primary types of VA loans. The first one is a purchase. So the purchase, it can involve the purchase of a single family home, a 2 to 4 unit property, a townhome, a condo. What's most important, with the purchase is that, the property must meet the VA minimum property requirement. So that's something that obviously we would work through the loan process. The next one is really my favorite one. We call it the IRRL, or the IRRL, which is the interest rate reduction refinance loan. So this gives the veteran the opportunity to pay off their current VA loan and take advantage of a more favorable interest rate environment, ultimately reducing payment, etc. One of the great things with these loans is that the requirements are typically less stringent. So there's no appraisal required. There potentially could be no income requirements that need to be provided as well. So, again, a great thing for a great benefit for the veteran in this situation. And then the third one is the cash out refinance. Very typical to normal, other conventional type loans, et cetera, that allow for cash out, with the exception that the cash out here will typically allow the veteran to go up to 90% of the value of the home, less their current mortgage and the refinance fees. So those are the three types that we typically that we share with the veteran and or the realtor. We do talk as well about the loan limits. What do I qualify for? And one of the things that's really interesting is you would think the VA would be very involved in setting maximum loan limits, etc. It's interesting that the VA actually doesn't set the maximum loan limits. The lender, through the process of reviewing the file, underwriting, understanding their geographical location, will determine what the maximum loan limit is. One of the other key factors in determining the maximum loan limit is whether or not the veteran has their full basic entitlement still available, as Kelly was mentioning before on the certificate of eligibility. Some other things that we get questions about all the time that we want to help clarify relates to things like credit score requirements. So what's the minimum? Similar to what I just talked about with the loan maximums, where the VA does not set that, the VA also does not set a minimum credit score requirement. That's typically done at the lender level, and is typically a qualifying credit score is typically 600 or above. We oftentimes get the question around the down payment percentage. As we talked about in part one, there's no down payment required, which is a huge benefit. It helps veterans get into a home with minimal money out of pocket, which is absolutely fantastic. Moving on to the next piece, if you recall just a few minutes ago when Kelly was talking about the funding fee, as it relates to the funding fee, we get questions quite a bit about private mortgage insurance. People are always are very aware of private mortgage insurance on conventional loans, on FHA loans. And the question comes up quite frequently is, what about my VA loan? I'm not putting any money down. So how much is my PMI? Well, the great news is there's no PMI or private mortgage insurance. That private mortgage insurance, as Kelly mentioned before, is really cared for by that VA funding fee, which is paid at closing. That's the fee that ultimately helps keep the program, the VA loan program, running for future borrowers. Mm-hmm. Prepayment penalty, no prepayment penalty. So that's again another great benefit. And another thing on the interest rates, these loans, as again Kelly started out with, they're backed by the federal government, so by the VA. So based off of that, lenders are able to charge competitively lower interest rates. So if a veteran were to look at a conventional loan versus a VA loan, their VA loan would typically have a lower interest rate associated with it. So that's as it relates to the interest rates. And then again, another item that we touched upon briefly during part one was the assumability of the VA mortgages. This is key, and this actually might may become more and more important in the future, depending on where interest rates go. So assumability of the mortgage allows the borrower to take over the terms of the existing loan, as long as the borrower or that person meets the lender's financial VA loan requirements. So as long as they meet those requirements, they're able to assume the loan. And again, as I mentioned, depending on where interest rates go, this could be something that could be very, very valuable to the veteran as a benefit, because it may make their loan and their property more attractive to someone coming in to purchase it, because they may be able to assume their loan at, let's say, 3% versus maybe current interest rates, which may at some point in time be 4 or 5 or 6%. So there's certainly a benefit there for not only the veteran, but also for the borrower as well. So, a lot of really good key terms, great questions that we get from our veterans, great questions that we get from our realtor partners. The bottom line is, here at Kaepnick Mortgage, we absolutely love our veterans. And we appreciate any opportunity that we have to serve them through the VA loan process. And while we've only scratched the surface of the VA loan program, what's really important to us is that if you have questions, or if you're looking to purchase a house, or if you know of a veteran that is looking to purchase and has questions, reach out to one of us here at Kaepnick Mortgage. Any question, anytime, we are always happy to help and happy to serve our veterans. So with that in mind, Sarah, I wanted to turn it back to you to see if there's any questions from those in attendance today.
Thank you so much, Randy, for that. And Kelly, it's just such great information, and it's important and valuable information for our veterans to know these things. And so now we're entering into our question and answer segment of the program. So again, that education piece is a cornerstone value of Kaepnick Mortgage, and we are really serious about making sure that you have all the information that you need. So let's take a look, and we do have a question that has come in. And so the question comes in, and it says, does no down payment mean that I don't need any money to buy? So again, does no down payment mean that I don't need any money to buy? So who would like to take this question and answer it?
Yeah, Sarah, let me take that. It's a great question. It's one that we get quite a bit. And it is one that we actually covered in the in part one of the series as well. So if you get a chance to go back and listen to that, you'll hear the same answer. So does no down payment mean no money? The answer is no. It just simply means no down payment. So when you look at your cash to close, there's three main components. The first one is your down payment percentage. That's what is 0% for a VA loan. As low as 0%. And then you're looking at things like your traditional closing costs, which I won't go into really any detail on. And then the third part of the cash to close is, setting up for the taxes and for the insurance. So if you look at your closing costs and setting up for your taxes and your insurance, that's where you will need to have money to bring to the table to be able to pay for those expenses.
Well, and so Randy, I love the stuff that you covered up front. And as you and I prepare for these Facebook Live events, we reach out to clients, past clients, and our community partners. So while I did that, one of the questions that came up pertained to what you were talking about earlier. So I just want to circle back to it for a minute, because it was a really good question. And the client had asked, why would I refinance with using my VA home loan benefit instead of a conventional loan? And, that is really why you call on, mortgage experts like us. That's not being cocky, that's being very sincere, because we will walk you through those options. And one of the biggest differences with a VA home loan, you can actually tap into more of your equity. I think you had mentioned earlier that most of the time we can go to 90% of your value. With a conventional loan, it's a lot more restrictive. The other thing is with a refinance, because we really, really love our veterans, and like you said, it's insured by the VA, so that makes it a lower risk loan. A lot of times the VA home loan is a better rate than a conventional. But the most important thing is we'll actually compare side by side those two options for you.
Right.
And whether or not your best option is a conventional loan or a VA home loan, we'll make sure that you understand the differences and guide you to actually make that choice yourself. So I thought that was a really good question. And then the other thing with the cash out refinance, you don't actually have to have a VA home loan to pay off. Unlike the Earl that Randy had talked about earlier, that has to pay off a VA home loan. But with a cash out VA home loan, it can actually pay off any type of a loan. So I thought those were great questions by the client that I wanted to share.
Yeah, thank you, Kelly.
Yeah, absolutely. And then I wonder, Sarah, did we have any other questions come in?
Yes, we certainly do. So thank you so much, and great information again. So we have another question that's come in that asks, this is good. How long does the VA loan process take? How long does the VA loan process take? So who would like to answer that question?
I guess I'll take it. I haven't been in the hot seat yet. So So I am really proud to say that we can close for a purchase transaction. We can close a VA home loan just as fast as we can a conventional loan. We do everything in-house here at Kevnick Mortgage. And I think I mentioned in part one that one of the myths that we're trying to bust is the fact that VA home loans take a lot longer to close. Well, that is a really, really old thing that is not true anymore. It used to be years ago, the loans were actually underwritten by the Department of VA, and that's no longer the case. So we have complete control of the VA home loan. We can close it just as fast as any conventional loan, and that makes it really competitive. Now, the super good news is on that EARL program, which is that interest rate reduction loan where we're paying off an existing VA loan, we can close that even faster because we don't need an appraisal. So those we've been closing in about 2 to 3 weeks, which is really fast.
Yeah, and purchases typically 30 days or less.
Mm-hmm. Yep. So it makes us very competitive.
Absolutely.
Great information. And as you were sharing that, we had another question that was coming in, so we can maybe expand on that. The question comes in, can you talk about the appraisal process? So you were just talking about that. Is it true that the appraisal process is more cumbersome than other appraisals? So maybe we can expand on that to answer the viewer's question.
Sure. And Randy, if you don't mind, I'd like to take that one because I used to be an underwriter. That was one of the questions that even underwriters would ask. And underwriters are the people that are behind the scenes, approving and denying the loans, looking at the appraisals. And with the VA home loan program, again, in the past, it used to be cumbersome. It used to be clunky. And now for the VA appraiser panel, so those are the appraisers that are certified to do VA home loans. They actually have to turn that appraisal within 10 days. So it can actually speed up the process because in the conventional housing market, we don't have that to hold over their head. It's just subject to market turn time. Whereas with the VA, it's actually the Department of Veteran Affairs that mandates if you're going to be an appraiser for our veterans, you got to do a good job and you got to turn it in 10 days or less. So that is a huge advantage, actually. What else do you got for us, Sarah? We're ready. We're ready.
That's so
Bring
great.
it on.
Yes, and I think that that's good. All these things that people might not know, and it's to how to get through the process. Well, you know what? That let's talk about that. Like how do you get started for the viewers out there, for people who are going to be listening to this on the podcast? And what I'm going to say before we go into that is, look in the comments. I did put the links. You can watch part 1 and listen to part 1 in our new Ask the Mortgage Guides podcast as well. So look in the comments for that. So, but before we get into how we get started, we have another question that has come through, and the question is: with the market we are in, how do we position a VA approval versus a conventional approval? So, with the market we are in, how do you position a VA approval versus a conventional approval? So, who would like to answer that question?
Yeah, I can start with that. And Kelly, if you have anything to add to it, please do. So, this kind of goes back to something we talked about during the first part, of the series. The VA loans were not necessarily looked upon as favorably as some of the other loan types that were coming through. But it's clear, looking at the program, the turn times, the rates, the qualifying requirements, the no money down, VA loans are as competitive as a conventional loan, as competitive as an FHA loan. Cash offers, cash is always going to be king. So those typically are going to be the most preferential, but it really is going to come down to, the quality of the loan, the quality of the offer, and the VA loans, like I mentioned, they're just absolutely as strong as the other types of financing that a client can get.
Well, and I think that's a great explanation. The other thing is that there's really a benefit working with somebody that has such a good reputation in the market as Kevnick Mortgage does. And it's because when we talk to those listing agents in a multiple competitive offer, they understand that our pre-approval is fully vetted. It is a solid pre-approval because we underwrite our VA home loans in-house. So we certainly make that clear. We also have a powerhouse team that actually works on these loans and backs that up. And we have a reputation of closing on time. So that really, really helps. There are some of our competitors that are online competitors that do a good job for VA financing, but they're not in our markets. That's why you have Randy in Florida, you have me in Minnesota, and we have other locations because you really need the boots on the ground to make the case for that VA home loan and that purchase. So I think that really helps too, having the power behind it.
Yeah, agreed, Kelly.
Thank you for answering that question. And we have some love coming in from Kevin. Hi, Kevin. He says, "You guys rock. I'm truly blessed to work with you guys. Best in the business." Yay, Kevin. That's awesome. So thank you for the love there. So let's talk about let's answer that question for the viewers and the podcast listeners. How do you get started? What's the best way to get started? So who would like to take us through that and answer that question?
Go ahead, Randy. You are really good at this part. I always seem to stumble on my words. Fire away.
Hey, you know what? The biggest thing is reach out. We always say, we get questions from people. When should I start inquiring? When should I, put an application, et cetera? And our answer is always yesterday. And the reason being is that we have the opportunity then to take a real good look at the file, address any challenges that might exist with the file, and or educate the client as to what their options are. As we've talked about before, we're huge on the education, we're huge on the evaluation, and we're huge on the execution. So those are the 3 E's, or the 3 pillars that that we live by every single day. So we always encourage you to reach out, email, come to the website, submit a request, give us a call, a text message, any way that you think you can get a hold of us. Truly there's an option to get a hold of us. So again, just the biggest thing is just reach out, and we're happy to help anytime.
So great. get started. Love that. So we have Carmen who is saying hi all. So let's do a shout out to Carmen. Thanks for watching
Norman.
tonight. Thanks so much. We will have the replay will be here. We're actually live streaming to our Facebook page and to our YouTube channel. And we'll also have part two available coming soon on the new podcast that we have. So you can listen to it there on the replay. But before we wrap up for the evening, we would like for you to mark your calendars because we have our next Ask the Mortgage Guys coming up on December 15th at 5 p.m. Central Time. And we're going to go ahead and put out the Facebook and the reminder and everything. But we're going to have Kelly. Kelly, we're having you back, right? And we're going to have
Yep.
Nikki back in the house. Can you share with us and our viewers and our listeners what we're going to be talking about next on December 15th?
Absolutely. We're super excited based on the responses that we've been getting from our previous Facebook Live and, the available channels. And now that we're doing it in a podcast, we're getting more and more requests for topics. So first of all, thank you for that. So what we're actually doing is we're going to roll out a 3-part series, and it's strategies for your next home loan. And we're going to kick off the first one, Nikki and I, on December 15th. 5 o'clock Central Time on the Facebook Live. And it's going to be focusing on business owners, so the self-employed. And for a couple different reasons. You have Nikki and I in the house because we are both what I call recovering underwriters. We have underwritten for a really long time in our career, which is, again, behind the scenes approving and denying loans. So we'll have the details that you need. Two, our self-employed business owners really have been hard hit with COVID. So we are the home loan experts to help them through that. And then also taxes were just done. So a lot of good reasons to highlight our business owners before the holidays. And then the other series, 2 parts of the other 3-part series are going to be for retirement planning and whether or not you want to buy your first home or step up into another home. But December 15th, we're going to talk about self-employed, and I expect some challenging questions at that point. So I'll have to make sure I get a good night's sleep the night before, but that's what we're doing.
That sounds really great. And so make sure to follow us on Facebook. You can subscribe to our YouTube channel. We put the information out there. You can get a reminder, join us here. We always do have the replay, but we love to have you watch us live and interact with us with your questions because we're here to be a resource for you. So before we wrap up this evening, I just want to hand it over to both of you. Any final thoughts before we close our program this evening?
Just a sincere thank you to our veterans and their families. For me. And Randy?
Yeah, no, the same. And just we are absolutely here to help, and we're absolutely committed to helping our veterans get into either their first home or their next home. So reach out, give us a call, and we'll definitely get you through the process.
Absolutely. As a daughter of a Vietnam veteran, this is near and dear to my heart. And so I'm going to go ahead and put up our slide here. We want to say thank you very much for spending some time with us this evening. If you are watching this or listening to this on the replay, we thank you for your time. We look forward to answering any questions that you have. You can reach out to Kevnick at kevnickmortgage.com. So we appreciate your time this evening. We look forward to positively changing your home finance experience. So until next time, have a wonderful evening.
Bye.
Thanks, everyone.